Hi there, and welcome to our finance terminology series. In this video, we're gonna look at the cash flow statement. What is a cash flow statement? How do we read and analyze a cash flow statement from an analyst perspective so that we can help you develop your finance education and your understanding of these financial statements? So let's get started. What is a cash flow statement? A cash flow statement can simply be defined as a company measure of cash activity over a period of time, cash inflows and cash outflows. Now, the cash flow statement is broken down in three parts. The first part is the cash flow from operating activities. The second part is the cash flow from investing activities. And the third part is cash flow from financing activities. Now let's examine each one of these sections a little bit more carefully. The first one, cash flow from operating activities, measures the cash generated from the business core operations. We first start with net income, followed by depreciation and amortization. And if you are a publicly traded company, you'll have stock-based compensation, deferred taxes, and any other forms of cash flow from the operations of the business. Then it also includes the working capital cash inflows and outflows that is recorded from your current assets and current liabilities. You add all of the cash inflows and outflows within this section and you arrive to the cash generated or cash flow provided from operating activities. Now let's look at the second part, cash flow from investing activity. This section of the cash flow statement measures the cash invested in the business infrastructure in the form of property, plant, and equipment, otherwise known as CapEx. In addition to that, you have cash flow from marketable securities, buying and selling short-term treasuries, CDs, bonds, or stocks that is related to investing within the business. You also have cash flow from acquisitions or the sale and disposition of other assets within the business. You add all of these together and you arrive to the cash flow from investing activities. The third section is the cash flow from financing activity. This accounts from the cash raised in the form of equity or debt within the business. In addition to that, it also measures the cash that has been paid down from debt that was raised from their lenders. Also, cash distribution to the shareholders in the form of a dividend or share buyback. Now, to measure the cash flow from the period, you would take all three cash flow generated from each one of the sections and combine them to arrive to your cash change in the period. If this number is positive, like in this example, then the company generated cash flow for the period. If the number is negative, then the company had cash outflow for that particular period, which we would use to determine what is the cash at the end of the period. Now, there's another measure for us to look at from an analyst perspective to determine the overall health of the business in terms of generating cash from their core operations. This is known as free cash flow. To calculate free cash flow, you simply take your cash from operating activities minus your cash flow from your property, plant, and equipment. You get the net amount of that, and this is your free cash flow. This number is very important because it tells us as investors, as analysts, how much cash the company has available to either pay down their debt, their obligations, return capital to their shareholders in the form of a dividend or buying back shares, and also to reinvest in the business to continue the development and future growth of the company. Now, with that being said, let's look at an example. Let's look at Apple's cash flow. Now, when looking at Apple's cash flow, the first section, cash flow from operating activities, you'll see that they generated in 2019 $69.3 billion. Upon a closer examination, you'll see the first line item is your net income, which generated $55.2 billion. You'll see that depreciation and amortization is $12.5 billion, and they added back share-based compensation of about $6 billion. They also accounted for their changes in working capital, their current assets and current liabilities, and the aggregate of all of this was a positive cash flow for 2019. And of course, you can compare this with other previous years, 2018 and 2017, and you can see that Apple, from an operating standpoint, is generating positive cash flow. Let's look at the second part, the investing activity section. You'll see that for the period of 2019, Apple generated $45.8 billion in cash flow from investing activity. But upon closer examination, you'll see that the cash flow really came from the proceeds of maturities in marketable securities and also the proceeds of sales in marketable security. They also reinvested in the property, plant, and equipment in the form of CapEx, $10.4 billion. Again, you add the aggregate and we arrive to $45.8 billion. So for the year 2019, Apple generated a positive cash flow from investing activities. But here's something that really stands out. If you take a closer look at 2017, look at their purchase of marketable securities. They spent $159 billion in purchasing stocks, CDs, treasuries, any form of liquid investment that can easily be converted into cash. That is a large number. When you look at the cash from our investing activity for that period, it was minus $46.4 billion, which represented in 2017 a big investment in marketable securities. Now let's examine more closely the financing activity section. In 2019, the financing activity section was minus $90.9 billion. But if we examine this a little bit more closely, we can see that Apple paid their shareholders in the form of dividends and repurchasing their own stocks. They paid $14 billion in a form of a dividend, and they repurchased $66.8 billion of their own shares. And when you add the aggregate of this amount, the net will give you $90 billion. Now we can simply summarize this as Apple has been returning money to their shareholders. And if we compare this to the other previous years, you can see it's the same story. Apple has been repurchasing shares. Apple has been giving a consistent dividend, and it actually has been increasing. Ladies and gentlemen, this is a cash flow generating machine that is consistently paying back and rewarding their shareholders. Now, if we take it one step further, if we look at the cash change for the entire period, you can see that in 2019, cash increased by $24 billion. If you look at 2018, cash increased by $5.6 billion. And in 2017, it was actually a decrease of $195 billion. Now, of course, we know that in 2017, they repurchased $159 billion. This is the reason why they had a decrease. And below that, you can see the cash at the end of the fiscal year period. Now let's take a look at a more narrow measure of Apple's cash flow performance by calculating their free cash flow. If you recall, the formula for free cash flow calculation is take your cash flow from operating activities less your capital expenditures or your property, plant, and equipment. You'll see that for 2019, Apple's free cash flow is $58.8 billion. In the previous year, it was $64.1 billion. And in 2017, it was $51.7 billion. Now, this is a very important number because it shows how much free cash flow Apple is generating after all of their operating expenses, their working capital, and reinvesting in the business to maintain their operations. This number can be used to pay down debt and reward shareholders like we've seen in the form of dividends and share buyback. Now, this example gives us more understanding of how we would read and analyze a cash flow statement from an analyst perspective. If you're someone that has investment in stocks or is looking at a company, I hope this serves as a process on how to better read and understand the cash flow statement. Now, let's summarize what we've done. We first define what a cash flow statement is a measure of a company's cash flow activity over a period of time. We looked at the three sections of a cash flow statement: the operating activity section, the investing activity, and the financing activity section. We also looked at free cash flow calculation, which again is the cash that the company has available to pay down its debt and also reward their equity investors or their shareholders in the form of a dividend or share buyback, and can also be cash to either make an acquisition and reinvest in the business. So we hope again that this gives you a better understanding of reading a cash flow statement. And again, if you have a stock or of a company as part of your portfolio, make sure that you apply this simple exercise in that business. So we hope that you find value in this video. You learn a little bit more of the process of reading and analyzing a cash flow statement, and continues to help with your education development in finance terminology. So with that being said, folks, take care, stay safe, and I'll see you in the next one. And if you're a student or an individual looking to further develop your soft and technical skills in stock analysis, then don't forget to check out our financial analyst and investment banking training course, where we design a very structured curriculum with over 90 hours of video lectures, 7 financial modeling assignments, and 4 investment case studies designed to teach you the right process. So what are you waiting for? Enroll today and start analyzing companies like a professional.